Swing trading has taken the retail trading world by storm, with many beginners looking for a reliable strategy to boost their trading profits. One of the most promising swing trading strategies for beginners is the moving average crossover strategy, which involves using two moving averages to generate buy and sell signals. This strategy is based on the idea that when a short-term moving average crosses above a long-term moving average, it's a bullish signal, indicating that the stock is likely to rise. Conversely, when the short-term moving average falls below the long-term moving average, it's a bearish signal, indicating that the stock is likely to fall. To implement this strategy, we'll use the 50-period simple moving average, SMA, as a short-term indicator and the 200-period SMA as the long-term indicator. For our example, let's use Apple Incorporated, APL, stock, which has been a popular swing trading candidate in 2026. We'll set our trading parameters as follows: position size,